Gold's actually at 2,900 as we speak. The futures are above. It was much higher. It was at 2,930 futures last night. It's off a bit, $10 down. Nothing goes straight up. We are seeing action, Jesse, in the gold market that I've never witnessed as someone who's been doing this for, I hate to say this, it ages me, for 35 years. I've never seen anything like what we are seeing. I've been talking forever, Jesse, about, at least since 2020 publicly, about the amount of physical deliveries, physical demand that has happened off of COMEX and the LBMA. There was a group in 2020 that came out of nowhere on the commitment of traders reportables. So I don't want to get too deep, but every week the COMEX market publishes what they call the commitment of traders, and it typically has the commercial banks on one side and the specs, as they call it, the hedge funds on the other side. And as one goes long, the other goes short. It shows the positioning of the largest traders. And then out of nowhere in 2020 came this third group of reportables that no one had really ever heard of, called the others, that are largely believed to be sovereign wealth funds. And we have been able to track and witness and watch in real time the stupidity of the Western suppression scheme of holding down the price of gold and silver with naked futures contracts. As an example, in silver on the LBMA, they have 300 million ounces afloat, they call it. 800 million ounces total of silver. 500 belong to the ETFs, 300 are available. Yet they trade 2.9 billion ounces per day. 3.5 times annual global mine supply. They say it's only 290 million ounces they're trading, but they say, well, that number could be up to 10 times short, underreported, because we only post the final settlement number. So you have 300 million ounces, you're trading 3 billion ounces every single day. This suppression, of which 90% plus are naked contracts, meaning no metal behind it, just commercial banks and their ability to suppress the price of gold or create an illusion or a reality with paper. And we've watched as these other banks, largely in the BRICS nations, have drained the exchanges, standing for delivery slowly, copiously, not too fast, not enough to raise the alarm, but slowly enough, drip by drip by drip, and taking it from different exchanges and in different manners to bolster their stockpiles. That's well documented. Well, if we see what's happening right now, just for example, in the month of February, Jesse, off of the COMEX market, 59,296 contracts stood for delivery on the February gold contract, far surpassing the largest record ever during the COVID crisis of 47,132 in June of 2020. In other words, that's 5,929,600 ounces of gold. Try to multiply that times 2,900 and your calculator freaks out. You get the E. It's a lot of gold. And who's got that money? Why is it all coming home? 13,735,000 ounces of silver were delivered on the February contract, 2,747 silver contracts delivered. Things are happening at a level that I've never seen. And I have an opinion on that, but I guess what I'm really trying to say is that, look, gold's up $200 plus in the last 30 days. It's up 900 in the last 365 days. It's quietly creeping higher. Nothing is stopping it. And I think that we are moving in a direction that most people don't. I would say to you, my gut is that they are intending to revalue the price of gold. They're bringing it all home. All of this gold is finding its way to the COMEX market, leaving the LBMA. People are saying it's because of the Trump tariffs. No, I don't think it is. I think they have a bigger agenda at hand. And we can talk about that, but a lot of things are lining up. As an example, and you can stop me at any point if I'm going too far here, but look, you know, when JP Morgan paid a $920 million fine to the Justice Department, that was bad enough. It was the largest fine that the Justice Department ever handed out. And hang on one second. Come here. My dog, as I showed you earlier, keeps jumping on my leg and won't leave me alone until I pick it up, and it will distract the hell out of me. Sorry, she's a new puppy. Anyways, they paid the largest fine to the Justice Department ever handed out. And yet somehow they were allowed to be the custodian of the world's largest silver trust, still SLV, along with BlackRock. Well, guess what? They just took over GLD with BlackRock from HSBC Bank. And now you have JP Morgan controlling one of the largest stockpiles of silver in the world and one of the largest stockpiles of gold in the world, I find it a little interesting. At the same time, we're seeing massive amounts of gold and silver, massive, being shipped home to New York under the guise of tariffs. Now, let's go back to 2019. What did the BIS do? Reclassified gold as the only other tier one asset. So you have gold as a tier one. You have this cartel bank who's been really the center of all the conspiratorial talk forever. Now the custodian of the largest silver trust and one of the largest gold stockpiles in the world, along with BlackRock. You have all the gold and silver being shipped across the globe right now to the COMEX market. You have something called the gold revaluation account. Every central bank on the planet holds gold in the revaluation account, all of them. I think the U.S. government and the Federal Reserve are accumulating metal, maybe as part of a sovereign wealth fund strategy. It's the Trump tariffs that have accelerated the migration, but that's not it. I think it's more along the lines of this is a plan to get the gold and silver home, to issue some form of a stable coin, some form of a system collared and pegged to gold to give the United States Treasury market in particular, and the dollar, credibility. And maybe they're front running BRICS by being the first one to monetize gold. Because remember what Dilma Rousseff said, the head of the BRICS New Development Bank, the former president of Brazil. What did she say in Kazan? We have agreed in principle to a new settlement token called the unit, which will be 60% currencies of the BRICS plus nations, 40% gold in kilobar form, deliverable upon request. Now, the unit would only be for central banks and commercial banks. BRICS Pay and BRICS Clear would be for the B2B and for the consumer. But systems are moving away from opaque debt instruments to transparency backed by something. And that is what Zoltan Pozsar says is Bretton Woods 3, a system that is pegged to commodities and transparency. I think it's that you're seeing confidence in the system erode, and the only way to keep the whole system from unraveling, I think, is to have some form of backing, tangible backing, and stop taking promises of governments that lie to us. And that would be using a marriage like stable coins between blockchain technology, because it comes out and says no CBDCs. Okay, fine. Well, how about the back door? And if you look at all the stable coins right now, most of them, like USDT Tether, USDC, which is by Goldman Sachs, the new Ripple one, they're all massively backed by U.S. Treasuries. So the stablecoin thing is being pushed quietly, and I think that's exactly how you do it. When Judy says to me they'll issue stablecoins off the 50-year Treasury, I mean, to me was the key that unlocked, oh yeah, this is what they're going to do. They're going to use stablecoins to fool everyone from not taking the CBDC, think it's cool, have it pegged to dollars, or have it pegged to gold. The whole thing is happening at a speed that I think is just a lot more than threats of Trump tariffs. And when you see, let me just read something to you here. In terms of deliveries that are coming into COMEX, JP Morgan set to deliver $4 billion in gold bullion to COMEX in February. Well, since November, Jesse, 12, almost 13 million ounces of gold and over 40 million ounces of silver have moved from the London vaults to COMEX. It's as if they're setting up for some form of a new system or a sovereign wealth system, whatever it is. It's bigger than just Trump tariff threats, in my opinion. The deliveries, number one, the erosion of just how much is available. For example, like I mentioned, on the LBMA, they have 300 million ounce float. They're trading 2.9 billion ounces of silver per day, 3.5 times annual global mine supply. You see countries that are standing for delivery massively. Look at India. They've purchased 900 million ounces in the last 4 years. You're seeing China fly all around Latin America, in particular Peru, and buying up all the doré and concentrate. Now, they're paying double what the West will. Doré would be a bar that is crudely refined by the miners before they send it in for full refining. And concentrate is a sludge. You fill it up in a jar. And that would be the byproduct of the mining endeavors and the doré making. And anyways, all of this is being paid They pay double what the West will. They ship it home to China and refine it there. 75% of all their silver used in industry right now is a concentrate byproduct. So that disintermediates the market. That disintermediates the ability for the world to price it, to have any idea of exactly how much they're buying. They're also the second largest producer of silver in the world. You have Russia, who's come out and publicly said we're adding it to our strategic stockpile. Governments really don't say that very often. And then there's some interesting things happening right now in SLV. So, a lot of the manipulation that people talk about is centered around GLD and SLV, where you're able to naked short a ETF, which makes no sense. But check this out. Over the last couple of weeks, the fees to borrow, if you're short and you need to borrow to go short, or borrow shares to cover whatever it is that you need to do, SLV borrowing fees have soared from 0.05% to 12% in the last couple of weeks. The shares available for borrowing have collapsed in the last 10, 20 days from 10 million shares available to only 10,000 shares available. That's a 99.9% reduction. 953 million ounces are sold short out of SLV. This is setting up for a massive short squeeze. So you get all these people that short the hell out of SLV, and now if there's 953 million ounces sold short, I think that works. I think it's 10 ounces per share. There's not enough shares to cover that if everyone tried to cover.